Hello, everyone, and welcome to the webinar. Just going to let everybody join in, and we are recording this, and I will let you know once we get started. Nico is here working with me as my assistant. Thank you for that. And I just want to let you all know, it would be really helpful if you could put your questions in the Q&A feature on Zoom versus the chat. You can use the chat as much as you want. I just have a lot I'm going to be getting into and covering, and because I'm the only presenter, it'd be really helpful for me if you just put the questions in there. And I'm going to prioritize questions that are not anonymous. Anonymous questions will not really receive as prioritized responses. And I'm going to prioritize responses that are focused on this question of investment opportunities in CEA. So I look forward to your questions. I hope that I think we will have enough time for them. I'm trying to keep my presentation tight. But welcome to the webinar, and just a reminder to use the Q&A feature specifically so that I can respond to questions as they build up through the presentation. And at the end of the presentation, we'll get into the Q&A section, and I will not prioritize anonymized Q&A. And that's because I really want this to be valuable to those people that are really engaged in CEA, specifically investing in CEA. Now, this has been positioned as a webinar focused for investors, and that is the main intention of it. But I decided to open it up to invite other people from the industry into it. But my prioritization is still around this context of what is the current state of controlled environment agriculture and vertical farming and investment considerations for that. That's what I wanted to share. We've seen a lot of different discussions. You've probably read some of my articles, and I thought, you know what, let's get on a webinar. Let's just be straight to the point and share some insights that would be valuable to the community as far as Agritecture sees it. So thank you for being here. Really excited. And you should be able to see that Q&A feature and put questions in there whenever you want. In the meantime, you can use the chat here, and you can just say where you are or where you're from. I will see that chat as well. I don't really want questions specifically in there too much, but why don't you at least let everybody know where you are, who you are, etc. I'm Henry Gordon-Smith. I'm currently in Marbella, Spain, and I'm the founder and CEO of Agritecture, and we're going to talk all about that. So let's get right into it. I really just want to be as efficient as possible. Nico, I just need the request, the sharing option open for me if you can do that. Hello, Kenneth. Hey, Clara. Belize. Okay, great. Thanks, Nico. Going back to the beginning. Okay. Here we are in the opening slide. Welcome to this special webinar, the No BS Guide for Investors, about vertical farming, controlled environment agriculture. And that's really what it's about. I really just want to have a candid conversation about controlled environment agriculture, which includes greenhouses and vertical farming, and specifically vertical farming itself. I want to share some knowledge, some perspective with you, and I want to answer some questions. That's the objective today. I'm looking at my phone over here sometimes because I've got some notes, because I'm on my own here, and I hope this is beneficial to you, and I hope this is a great experience. So let's get into it. First of all, if you don't know Agritecture, we have a really interesting story. I actually started as a blogger in college looking at urban agriculture and how CEA technologies could help us grow more food in cities. And I found so many data gaps in these technologies and how they might work, how the ROI might be. And I saw vertical farming gather a lot of interest. I was excited about it. I also was part of that interest, but I really wanted to get to the numbers. And there was this huge hype stage that occurred, especially from, let's say, 2018, maybe even 2015, leading into 2021, where it sort of really peaked, I thought, for vertical farming as this future of food solution. So we've been in it. We've been in it for a while, but you may not know that beyond the content that we created at Agritecture, which is sort of part of our DNA since I started as a blogger, most of our work, most of our activity is actually market research reports, strategic planning, due diligence for investors, feasibility studies, detailed design of greenhouses and vertical farms around the world, climate smart agriculture planning projects, agritourism projects. We do a lot of different things around the world that I always want to remind people of what we do behind the scenes. and what our main business is, and how our DNA of thought leadership and creating content is important, but is not the only thing we do. And today is really about questions of feasibility and sort of the market studies and due diligence work that we do. These are the services related to the content I'm going to be sharing a little bit today. If you have any questions about Agritecture anytime, you can definitely reach out to me or any of my team members or through our website to talk to us about what we do and if we might be able to help you get to your next step, which is what we're all about. This is our impact to date so far. So we are global. I was born in Hong Kong. I grew up in Hong Kong, Tokyo, Germany, Czech Republic, and Russia by 18. Then I studied in Canada for my undergraduate degree. Then I went to New York and did my master's degree there, and I lived there for 10 years. And then for the last 5.5 years, I've been a nomad, traveling around the world, working and going to events and visiting clients. So a globalness, let's say, is a big part of Agritecture's DNA, just like the social media content part is part of it, because our team really reflects my vision for the world and our mission to adapt agriculture to climate change and to make it smarter. So, as you can see here from this map, we are really across North America, Europe, and the GCC as our hotspots. We're expanding more with projects in Africa, climate smart agriculture projects, climate change related projects, skills mobility and training related to agriculture projects. But we've also done quite a bit of work in Australia and Southeast Asia as well. So Latin America is somewhere that we're entering now actively with our new employee, Victoria Mora, who is Brazilian and is helping us grow our business there. But unfortunately, we don't have a lot of business there to date. But these are our projects to date. I think we're at 350 projects in 45 countries so far. I'm Henry, as I said. I started Agritecture in 2014 officially as a consulting firm with a technology agnostic view of controlled environment agriculture around the world. And we've broadened. So now we also do climate smart agriculture, precision farming technologies. But we mostly focus on greenhouses and vertical farms, what we're talking about today. I studied political science for my undergraduate degree, then sustainability management for my master's degree. I'm so excited because I'm returning to Columbia University in the fall to be a lecturer on climate smart agriculture at Columbia University. So that's going to be a really fun experience for me. Again, this is a course called Smart Agriculture for a Changing Climate, where we look at all the continents around the world, the economic losses due to climate change, and what kinds of technologies are being applied or could be applied to intervene and adapt to climate change. So that's a really exciting moment for me. I'll be moving back to New York in September, and I'll be mostly in New York September 2025 until May 2026. Thankfully to all of you and others and third parties, I've been recognized as a voice on controlled environment agriculture. I've spoken on it on 5 continents and been featured in various news articles and received some awards for that. And I've advised on a lot of investment related to the sector, whether it's from planning individual farms or due diligence related to farms. And as I mentioned, I'm a nomad. And you can connect with me on LinkedIn. I've got a weekly newsletter. And a lot of the things I speak about today are also brought up in my weekly newsletter. So I invite you to benefit from that as well. Okay, let's get into it. So I really want to talk about the current state of controlled environment agriculture. And what I've been saying online is this is a paradox stage, and that'll make more sense as we clear it up. And so when we're looking at greenhouses versus vertical farms, one way we can look at it is sort of like the market size. And so we approach this vertical farming market size number that we have here, which is $5 to $9 billion from a bottom-up approach. So essentially what we did is we looked at the number of container farms, small farms, large vertical farms all around the world in different markets. How many do we think exist? How many do we think are operating still? And how much produce can they sell? So this is like the annual farm gate value estimate, which is what we're trying to look at. Okay, that's what we're trying to investigate. That was our approach because vertical farming has much less data related to relative to greenhouses to come up with a viable market size estimate that an investor could bank on, could use to think about. And so you can think about the market size from the perspective of the equipment sales, which is what a lot of the market reports out there do. They talk about market sizes of 10 billion leading up to 20. I've seen some that say by 2030 it's going to be 25 or $50 billion market. That's not correct. That's the BS we're talking about, right? When we think about the sales of equipment to vertical farming, that is not necessarily the market size number that we want to look at, that we find very valuable. Because in the end, whether it's a greenhouse or a vertical farm, it's the product that we're selling, that consumers are consuming, that is the value. Obviously, it depends what you want to do. Like if you're thinking about building technologies for the sector, that matters. But there's not a longevity, a success to the industry if people aren't inevitably consistently consuming the product produced in this form and this production method of agriculture. So the farm gate pricing is relevant in that sense. So we're pretty conservative with that. Like I feel like that 9 billion number is still quite large, but I'll show you a little bit about how we thought about that number in a moment. But that's where that one comes from. And this 25 to 30 billion greenhouse number comes from a lot more validated data from Rabobank and other sources, because this market is more mature, right? And there's certain greenhouse hotspots around the world that exist, like Almeria, like Westland in the Netherlands, like Leamington in Canada, or in central Mexico. There's also a cluster. And then you have, of course, China, that has a huge amount of greenhouses. And so, this is the number sort of without China, but it could be like a bigger number, okay? So this is just sort of some high level numbers. I mean, market sizing is always a little bit troublesome. It depends what you want. We provide specific bottom up market estimates, like the vertical farming number, for our clients when we do market studies. So we look at how many farms are there, how many farms are in business, how much might they be selling, how much might they have spent on their equipment. That's how we look at it. So it's really about the context of the question, but here are some just ranges that we're looking at. And so that vertical farming number is actually a pretty significant percentage of that other one. And that's because of the value of these leafy green products that are coming out of these farms are pretty high is one possible consideration. We can talk about that more in the Q&A section. Okay, so when we looked at the vertical farm facilities, we looked at container farms, boutique vertical farms, which are sort of these small distributed ones around the world in urban areas, medium vertical farms. We could talk about how we define those. I could look at my notes, and large vertical farms are maybe what you think about with the sort of bigger facilities that have gotten a lot of attention online, et cetera. And so we look at these all around the world and estimate them. We also did specialty mushroom vertical farms and strawberry vertical farms and made special notice of them, as those are kind of emerging aspects of this. But those sometimes could be in the boutique or the medium size. They're not always in the large size necessarily. Large size tends to be more of these microgreens and leafy greens producers. And this is sort of what the diversification looks like around the world in that. Okay, so there's some key differences, but like one thing to keep in mind here again is, just like greenhouses, Asia has a huge percentage of the CEA businesses that can exist and that do exist and will exist. So, that's really interesting to know about. When we're thinking from an investor perspective, we have to really think about the region we're investing in and the market opportunities there. For example, in greenhouses, if you just look at the total area of greenhouses, the vast majority of them are in China, but the vast majority of them are low tech. So they're not necessarily interesting to investors because they're not the kind of control that we think about when we think about controlled environment agriculture. The medium and high tech greenhouses, yes, there's some in China, but there are a lot more in Europe and Canada, for example. And those are opportunities to invest further and to produce higher quality product in the face of climate change. Remember that context of our mission, which is to adapt to climate change and create control, which vertical farming and medium and high-tech greenhouses can provide. So this is just sort of a picture of how we go through the process of going on a bottom-up approach to get to this estimate, to think about, okay, if there's this many farms, how much produce are they selling and what are they selling at? And we run scenarios about conservative prices for sales, medium or maybe more luxury, prices for sales that they're selling their products at for the vertical farms, which in most cases are going to be leafy greens and microgreens. In some cases will be specialty mushrooms, specialty vertical farms for strawberries, as you see here. Okay, so you heard me talk a lot about the hype cycle. I've talked a lot about this. I am the first person in vertical farming to publicly apply the Gartner hype cycle to the CEA sector. The reason I did that in the AgFunder article in December 2021 was because I wanted to be objective. I didn't want to come into this industry and say, boo these companies or boo that company. They're too hyped up. They're too whatever. I wanted to provide an objective framework because I'm in it for the long term. I believe in this technology. I believe in adaptation to climate change through smarter agriculture. And the hype cycle allows us to have a framework to look at how investment, hype, interest will drive the development of technology and its real impact on our world, right? So there's this innovation trigger, and like for me, you could talk about a lot of different innovation triggers, but there's climate change. There's Dr. Dixon Depommier publishing his book, The Vertical Farm, my mentor, rest in peace. There's various companies raising money, right, and proving technologies. And then it reaches this peak of inflated expectations. Just think about that, inflated expectations. We expect that vertical farming will grow wheat or rice or be everywhere or replace agriculture. These are inflated expectations at the peak that are problematic because they disconnect us from the real market size, the real market value, the real market potential and actual impact of these facilities and these technologies. So when that peak happens, it's a rush of investment that goes into it, which happens across many technologies, and then it starts to decline because those expectations and realities are not aligned. So what happens is the decline begins. And as the decline begins, we can see there's a range of successes and failures. And this is like just illustrative, right? These pink and green dots are illustrative, right? Just to show the framework a little bit. As we go down to the trough of disillusionment, let's say I predicted in 2021 that we were entering the trough of disillusionment. I think that's where I put it there. You know, as we go down, we're going to see more and more failures. We're also going to see some successes. So that's what I call like a bit of a paradox, right? We're seeing both. Wait, I'm hearing about Oishi raising a bunch of money, but Vertical Futures went out of business last week. How do I understand that? How do I understand that information as an investor, as a CEA industry leader? What do I do from that, right? Plenty raised the most money, but goes out of business. But yet I see a local sort of regional focused small vertical farm getting started, and they seem optimistic and that they're working, and they seem experienced, like they've got people from other farms that have knowledge. What do I take away from that? And I think that's the paradox that I'm talking about, is like we're hearing mixed messages and mixed news. And in order to break through that paradox, the best thing you can do is to think about context. Where specifically are we talking? Which market and why? Which customer and like which customer segment? And that'll make more sense in a little bit here. So as we move into the slope of enlightenment, which I kind of feel like I'm hesitant to say we're entering the slope of enlightenment because I still see so much of the crap and hype that has got us in the problem in the first place. And I'm trying to create content and share data and information with both my clients and public sector through our content that helps guide us through this, because again, I'm in it for the long term. But I would say, you know, we've pretty much lost the vast majority of investment into vertical farming. And now we're starting to enter the slope of enlightenment, and we're seeing what that looks like. And that's a longish journey. So there's wins and losses. There will still be losses as we go through that, because some of the previous players haven't necessarily gone to their bottom in that trough before they go into slope of enlightenment. And that's that paradox stage. And again, context will help you navigate that paradox stage. So what we learned a lot from the failures of vertical farming, and a lot of people have written about this, is that energy risk was really mispriced. Like the energy, everybody talked about energy being an issue for vertical farms, but it really wasn't emphasized enough. And this was just such a huge piece of the CapEx to power the lights and to cool the systems that it can't be underestimated. It's such a critical factor for vertical farming and for vertical farming investors. We also saw that there was a push to scale this technology really fast before proving that it was repeatable. Okay, so going too big, too fast is a really big mistake. And we saw a lot of big announcements, big farms. And it's not that the technology doesn't work, but there was sort of a mismatch between that energy demand, the CapEx requirement, and the consumer base that was willing to accept that price at that quantity, at that volume. Okay, so you know, when you go too big too fast, you're making assumptions that what worked at a certain scale will work at another scale, and that's very dangerous in vertical farming because it's high CapEx and high OpEx on energy specifically. Now, the overpromise go-to-market is important, right? Like there were a lot of promises because there's a need to hit retail channels at scale and to get big contracts. And so there's a lot of promises related to those that were pushed and say, we got a big farm, so we're going to sell a lot of product. We're going to put it at a cheap price. But there was a mismatch in all of that, a little bit too aggressive, a little bit too fast, even though there was a need and an addressable market for a higher quality leafy green product that vertical farms can grow, especially in North America. It's a little bit over dramatized, and the go-to-market strategy was a little bit too unrealistic in many cases. And you can see here some of my conclusions. Like, we don't want this because it creates inflated revenue projections for the business as the technology gets proven, the operations get proven, and we have the opportunity to scale, which is what the investors want, right? They want to see something that's going to work on the unit economics level and the fundamentals before it's going to scale up and make an impact. And what we want as an industry is we really want the technology to work and the products to actually be higher quality and consumers to enjoy them, retailers to enjoy them, and the volume and that market share that can be supplied through CEA to grow. And ideally, we want that to be a benefit for the environment and for society as well. So again, what we want is you need to obsess more over the market all across the long term. That consumer, who is your customer? How much are they willing to pay? What do they want? How many of them are there? And matching the technology to that is where we see the greatest success. There is an addressable market in every market, essentially, for vertical farming products, but you need to be honest about how big it really is and what the products that can be grown in there are. And again, some other takeaways are you need to de-risk the energy challenge as much as possible, right? So we saw in Europe, when energy prices spiked, vertical farms went out of business. So that was one signal. But we also saw in the US, the energy prices were also challenging for many operators just because it was just such a big cost center. And the operational experience, I can't underestimate, right? What we have now as part of this stage that we're talking about here, this stage here in the slope of enlightenment, like what makes this stage really viable is the veterans, is the people who have been in the farms, seen the failures from food safety, from lights, from climate management, from ladders, from data that wasn't useful to data that was useful. Like those are the veterans that are the most critical for the future success of this industry. Those operational experts that are from all these companies that still are in the marketplace that can work in these new vertical farms, they are the most valuable asset in the sense to make the operational realities exist. And the C-suites need to listen to them because these are plants and food products that are being grown. They're not just typical factories. And so these are some of the main lessons learned, if I can consolidate that. I mean, this chart is a little bit complicated, but this is basically pulling from various data sets on some of the difference between a greenhouse with natural ventilation in the Netherlands, a greenhouse that's heated in the Netherlands, an industrial vertical farm. It's really mostly just to say that context matters, right? You can see how the cost centers on OpEx change depending on when you are. It's like, duh, of course it does. And in vertical farming, there's sort of been this myth that it's sort of this box that you can put anywhere. And I think that's a problem. I think that's what's been part of the reason why the hype has got so bad is because, the context still matters for vertical farming, although those environmental considerations don't matter so much. The consumer context, the operational experience context, the energy context, these are the things that really do matter. The distribution context, they matter a lot. And so you need to look at those. And so all I'm saying here is just look at the numbers more specifically and where the cost and revenue centers are. So we did a lot of work looking at the fundraising itself and the failures, right? So there's an article we wrote on the two biggest enemies of vertical farming were sort of hype and energy. And we listed, you can see this diagram here, we listed all the investment that went to vertical farming that was lost. This is the pitch book version sort of that. I mean, essentially, there was this huge peak in 2021, and then it went down. So kind of looking like the trough of disillusionment. We'll see how the data plays out over the next few years, but this is being pretty consistent with the hype cycle that we're looking at. So what we want now is we want to get out of the trough of disillusionment and into the slope of enlightenment. We want to embrace the paradox stage and strengthen those projects and models that have success and have potential, and not give attention, not be distracted by those models that are still part of that earlier fad of vertical farming growing everything, vertical farming being the biggest, vertical farming replacing agriculture, vertical farming being totally proven. These are the things we want to avoid: the greenwashing, the hype, the aggressive, exponential technology investment sort of thesis for vertical farming. We need to be honest about what it can do and where it can fit. Okay, so one of the things I like to do, to be honest about, is like, let's just talk about the market. Let's just talk about North America, for example. Let's imagine all the Americans that exist. Let's just say 5% of them are luxury consumers. They're willing to go to Whole Foods and they're willing to pay for a premium packaged box of microgreens that's grown in a vertical farm. Let's say there's another group that goes to Whole Foods, but also some other quality retailers, and I call them the quality category, right? So they may go to Whole Foods, but they may also buy that leafy greens, but they may go to a little bit cheaper supermarket, but they're still focused on quality. They're trying to find something that's local or pesticide free or better. These are opportunities. So when we're honest about that, there's a significant addressable market size for leafy green production in North America that we can look at. That's, let's say, 25% that could be grown in CEA. But that 75%, the rest of it is based on price. And when we look at it and how CEA will be able to compete on price with field grown production, for example, right? That's the competition, right? Is most of it's being consumed by field grown production. When we think about how CEA can fit into that 75%, it's hard to see how it's going to work long term, meaning vertical farming specifically, not all CEA. So let's ask the question of, like, in 10 years, will vertical farming be able to compete in North America on field grown produce for the 25% listed here, that quality and luxury market? Well, the luxury market may buy from the vertical farms for various reasons. The quality market may buy some from it. But if we think about it, a lot of the benefits to vertical farms, like energy efficiency and lighting, new energy technologies, various breeding solutions, data solutions, all these technologies, automation, they also benefit greenhouses. So when we think about scenarios of, for example, climate change gets so bad in the next 10 years that California doesn't export leafy greens to Canada anymore, Canada could be is a really interesting market for CEA as a result of that, right? More greenhouses. But will there be that many more vertical farms to supply that? Maybe, maybe not. It depends on that energy context, right? A little bit, because the greenhouses have a really strong ability to compete with vertical farms. If we look at North America, Little Leaf Farms as a greenhouse that produces a significant percentage of packaged leafy greens in the Northeast, for example, the biggest, they have demonstrated that a greenhouse can produce these leafy greens and leverage these technologies. So the point is really, like, whether it's climate change or whether it's consumers demanding more high quality product or whether it's energy getting cheaper, greenhouses always have an advantage for the larger pieces of the market, and vertical farming tends to still stay in that luxury because of its higher CapEx requirements. It grows a premium product, a superior product, but it's still in that luxury category. And that's partially because we're replacing the sun with artificial lights and other various climate control considerations that increase the cost. I mean, I want to see if I'm saying a lot of things. Like, I want to see if that's like really important to think about, right? Like, if we think about vertical farming as being too big, we get lost in the investment opportunity we expect from it. So again, there's an addressable market in North America for the future based on luxury greens for vertical farming in the market. For greenhouses, there's definitely a market across the 25% and potentially going over into that 75% if those costs can come down and they can become more of like a commodity pricing benefit, right? So products that could be affordable for the average American, but grown in CEA. But every benefit to vertical farming is also benefit to greenhouses. So as far as a race is concerned, greenhouses as a larger volume of production is more likely than vertical farms. And that's important for investors and everyone to understand. But there are still critical drivers that are going to drive more farming indoors, like supply chain fragility, the buyers, retailers, and consumers wanting consistency and domestic sourcing. There's also tons around the world of policy, like the GCC food security initiatives that are driving a lot more farming indoors, but localization strategies, There's new energy options and incentives that are coming around. Consumer willingness to pay. There are certain markets where people are willing to pay, but there's also labor challenges, right? We're talking about high-tech facilities, and often there's not enough skilled labor to manage them. So there's a lot of opportunities and constraints that you need to think about in context to have any mature discussion about CEA through this slope of enlightenment stage. There's an interesting report from Vaca University about where CEA will grow, and that helps us say, what is the future of CEA and where will there be economic opportunities? And that you could break them into three categories. Emerging countries like the USA, which is a fragmented, high-value market, but fragmented from a greenhouse perspective. Most of that product is coming from greenhouses in Canada and Mexico, but there are other countries with potential as well. There's conversion countries, countries that have greenhouse history, but they don't have a lot of technology, and they could use optimization. They could produce more of a share of the global output of greenhouse grown produce or CEA grown produce. And there's countries I switched them up. And there's countries that already have them, which is the one I mentioned. There's countries that could move from mid-tech to high-tech, okay? So for example, Almeria, Spain is a good example, right? Like the pressure of the heat and the water in Almeria, Spain is getting hotter, is getting more intensive. I visit a lot of Almeria, Spain farmers. You know, their products are mostly at commodity prices, but there could be a future where they start to add more technology, and some of them are to create higher value products. That is an opportunity for investment potentially in the future. So in this paradox phase, we really want to think about just very simply, there's a lot of considerations. This is like a simple consideration, is that, you know, where there are markets, especially vertical farming, where there are markets where the market price is high for premium products, that luxury market exists, it's addressable, and they're willing to pay, and they have supply chain challenges or quality issues, and they're willing to pay for that premium, and the energy prices are low. That's sort of a sweet spot for vertical farm. But you can imagine that there's not that many places that fit that category. Everything else is quite risky at this time in the context of vertical farming in particular. For greenhouses, I think it's a little bit incremental. There's a lot of things we can talk about the North American market. There's definitely great potential for greenhouses to supply those inevitable challenges with leafy green quality and production in the coming years. But this is how you sort of think about how can you create a framework to think about where you should invest and why and what you should avoid. What are some of the key things to avoid right away? So here are some models that I think are really interesting as well. I'm going to speed up a little bit. These are not like necessarily what's working, but these are some like novel models that are kind of working. So we see berries and vine crops in energy efficient regions. We see microgreens and herbs with energy, like regions that work well. We see aero farms starting to have some progress with their microgreens, et cetera. That's interesting. That's an interesting example based on what we've talked about. We see premium strawberries as a niche in vertical farms as possible. These have potential, but investors need to be honest about how big these markets are and what kind of investment they want to have. It really depends what kind of investor you are. But we do see potential in these specialized categories. I also want to say there is a case for small scale distributed vertical farms. I was in Madrid not too long ago visiting Easy Farmer, and they're converting unused markets into unused retail spaces into vertical farms for microgreens. And that works. There's a business there that can work, where farmers can take them over and they can use unused spaces, and we can have urban revitalization. That's not going to be interesting to a large private equity firm necessarily in their current thesis, but it is an interesting investment because those farms tend to sell out of all their product. They tend to have really direct relationships with consumers and can get the best margins in their prices. These are some examples of these that I've visited around the world. I mean, Alaleo is interesting to me because they have a very low cost VF. So they're de-risking the CapEx of vertical farming by hacking it and building their own systems and operating it themselves. That's one way they de-risk that CapEx infrastructure of vertical farming. Farm One sort of de-risks it by creating a more premium product and urban agritourism, hosting events. They have a brewery in there, et cetera. Aquaverti, I think, really does it by just selling to the right customers and picking special products. And they also have, hacked certain vertical farming solutions to create their own robots and lower cost solutions versus these automation, high CapEx requirements that VC funded mega vertical farms required in that hype stage. So there's something to learn from these models, and there's something for certain kinds of investors to look at these, because these models can sometimes get payback in year 3, 4, 5, while those bigger models can get payback in year 7 if everything goes as planned. But the risk is higher because they're so much bigger and you're dependent on this like large retail contracts, et cetera. So there's something still here, and we see that in a large amount of the volume of vertical farms around the world are this kind. So we don't want to ignore them. We want to talk about them a little bit. These are just some requirements for success. You need the energy advantages from the beginning. You need to have a repeatable operations plan. That's for the scalability, right? Prove that it works. Have that team, have that operations manual, SOPs, food safety, all of that. And you need a buyer who's going to pay for the quality. Again, this is really focused on vertical farming because that's the most hyped up one in this case. Like if you want a vertical farm to work, you have to have all these things definitely required for success. In the future, I think that we're going to see a lot of, consolidation and larger greenhouses in the United States and North America, and we're going to see these distributed vertical farms around and some of these big ones, but not too many. The UK vertical farm is going to stay, UK and EU vertical farming stay pretty small still. I think it's small generally around the world. I think the CAGR for vertical farming is much smaller than greenhouses. I think that, most of the market reports are exaggerated on this. I think the GCC is really exciting, but again, that market is kind of small as well and a little bit nervous about going too big, too fast. They do have certain big projects. Those are already out there. Let's see how they perform. But I think there's a little bit of hesitation to do too many other big ones. Greenhouses have great potential there, but we really have to solve that high humidity problem that we have across the GCC, where there's great potential for CEA leadership. Asia, again, China is difficult because it's just got a lack of data and data access, but Asia overall is really compelling because they can develop a lot of these solutions at a lower cost with the electronics supply chain access they have. The consumers consume more leafy greens in the vertical farming context. There's more of a demand for cleaner food, quality food. There's going to be huge growth in that region in the coming years. I wrote all about this and imagining these futures in an article. All of this content is written in different articles on my Agritech Chronicles newsletter if you want to go deeper into any of these topics. Here's just some things for the future. I wrote about, combining energy, right? Energy is such a big issue. So if we can connect energy reuse to any of these CEA projects, we have really a great potential to de-risk the operational cost of energy for both high-tech greenhouses and vertical farms. And that is the future, I think, of this sector, this breakthrough that would really be needed, one of them at least. Also, hybridization of these, kind of blurring the lines between a vertical farm and a greenhouse, allows us to design more based on the context versus trying to fit a sort of established modular box like a container into a context. That's what agritecture really focuses on, is design thinking and contextualizing opportunities around market data and innovative design. And there's also opportunities, obviously, we've talked about this before, for breeding or other customers like pharma because of the consistency they can get from this. So if you're doing due diligence, here's just a quick checklist. I mean, it's really a lot more work than this, a lot more extensive. We provide detailed due diligence work to sovereign wealth funds, private equity funds, VC investors that are choosing an entrepreneur to invest with to build an individual CEA facility, you name it. We do a lot of work to help guide smart money in this sector, and we'd like to do more of it. So these are just some of the things that you're looking for, but we provide comprehensive support in this work, as well as work for the entrepreneurs in the context of planning the facilities, as well as work for corporates. We guide corporates on what's the market worth and should you enter it, et cetera. And I really thank you for this opportunity to share some of my thoughts with you. I know I speak relatively quickly, but I try to get a lot of information across. I have a perspective, I have experience in this, and I'm happy to start answering some questions. Thank you for your time. Okay, I haven't seen any of the chat, so let me go to the Q&A here. Let's see here from Ralph. Let me just look at some of these. Woof, take a breath. What is the break brothers? I will get back to you, Ralph, on this question, because I don't want to say the exact number. I am the CEO of the company. I have technical team members that answer the questions more. But for example, if you're getting 18 15, 18, 20 cents a kilowatt hour, like that's already way too far. Like you need to get way below that. I think the number I remember is like 13, 14 cents a kilowatt hour is one of those points, but the lower, the better for vertical farming for the rate per kilowatt hour. Where are we currently WRT in this timeline today with regards to this timeline today? Bob, your question is about the hype cycle. I believe we are still like, if you can imagine us being around the trough of disillusionment, but like trying to peak out of it. Like the curve doesn't just go down and then up. It goes down and like that's the paradox, right? There's these ups and downs, good announcements, bad announcements. It's about investor confidence, right? Like if there's not investor confidence, if there's not incentives, mechanisms, drivers, consumer interest, a supply chain shock to leafy greens or a food safety shock, we're not going to get into that slope. And like we need some things to drive the interest as well. So I believe we are at the edge of the trough of disillusionment with the potential to enter the slope of enlightenment. That's what my opinion is. And I'm disappointed to see people like Beyond Farming, posting the hype cycle and saying, this is the hype cycle, these are the companies that failed, and now we're done, and our technology is the most successful. Like that's the kind of stuff that I really dislike because it's not helpful and it's not true. And so, we need to be more objective about this and not just push our own agendas as far as our technology is the best or this or that. We need to understand that we're on a collective journey as well to demonstrate that this technology can help us adapt to climate change and be successful in producing higher quality produce with less land, less water, and much less pesticides. Kenneth, what can markets in the United States and North America take away from more matured vertical farm CEA markets in Europe and Asia to invest in infrastructure here? I mean, I wouldn't necessarily say like North America is quite in a mature vertical farming market. Most of the investment into vertical farming has gone into North America. Most of the biggest funded and the biggest farms have been and still are in North America. So there's a lot to learn from that. And that's of course because the climate for investing tends to come from Silicon Valley and America and its ability to fund. And that's a great part of certainly why I appreciate the United States, because it has a great capacity to fund innovation. And we want more of that for sure. But sometimes it also funds wasteful, stupid money and bad projects and failed projects. But to get to your point, investing in the infrastructure, I think the biggest piece that we're not seeing nearly enough investment into, which I talk about a lot, is the skills. These are sophisticated farms. So how they operate, how they work, it's very important that we invest in the talent across the value chain of planning them, designing them, building them, operating them, distributing the food from them, marketing the food from them. That's the industry we need to build. And in the end, it's about people doing work and getting high quality product to people. So I think what we can learn from Europe is they've invested so much in two things. One is education and training related to agriculture and sustainability. And another is a commitment to sustainability. It's a bit stronger than the United States, I would say. Definitely stronger, not a bit. So I think that commitment helps us because it incentivizes data tracking, which can be useful to investors and operators and standardization. So when we think about the greenhouse data, why do we have so much greenhouse data? Well, thanks to Wageningen University, thanks to Rabobank, both of the Netherlands, thanks to a long, rich history of experience and knowledge and talent that country has invested in that is benefiting the world and continues to benefit the world. That's what the US can learn from it. That's what the GCC can learn from Europe as well. Henry from Reiner, what is your point of view of potential markets for growing plant compounds for other applications from fresh fruit, higher revenues, higher margin, with higher need for control? I mean, I think wherever there's a premium customer from the sense of a corporate or a pharma customer that needs a compound, like it's just about research, right? Like what is the compound, the ingredient that's at threat from climate change? Going back to sort of my course, what are the commodity crops, the ingredients that are at threat from climate change? And where could CEA of different kinds, let's say medium greenhouses to high-tech greenhouses to vertical farms, step in to fill that gap? And you can do an assessment, or we can do one for you to estimate what is the market opportunity to solve the problem of the likely market gap for that ingredient for those kinds of customers in those markets with which technology, greenhouses, vertical farms, etc. I can't give you that exact answer now because that requires a study, but there are certainly ingredients that are facing supply chain threats that I think there are some opportunities to turn into CEA. Ralph, well, I think I answered one from Ralph. Let's say Bob. Specifically, where does hydroponic farming fit with regards to, I think I answered one from Bob. Faye, I don't understand that question. I don't really understand this question fully because it's hard to read, but basically, yes, like, I mean, vertical farms can be more productive per square meter, but at what cost? And that's more the question. And what is the output product? How does the quality compare? And who's that customer? I think that's more of the question. Again, we have a software product where you can literally compare a greenhouse to a vertical farm. It's called Agritecture Designer, design.agritecture.com, and you can do those estimates, very basic estimates, but you can actually contextualize what I'm talking about. You can pick a region and contextualize those estimates to be specific. So that's not a question I can really answer effectively right now. Energy price. I mean, on energy, the short answer is, like, in the context of vertical farms, it can be like 40% or more sometimes of the operational expenses. So you really need to solve that problem and you can't have it fluctuate. And that's a huge decision to make. And any investor or operator needs to understand that in detail. Again, something you can estimate on our software or speak to Agritecture about in context. Let's talk about specific questions and specific regions, not general ones, because the whole point I've been trying to make is that the market size is smaller than you think for vertical farming, and the market size, either way, is better understood when you think about the specific context of a region and you match that with the technologies that might be able to solve the problems that that context faces today and will face in the future. Those are the opportunities. What would be the best investment? A small to medium system organic farm. This is an anonymous question. I won't answer it, but it is kind of an interesting question. Again, this is the wrong question. The question is, what do you want to do? What's the impact you want to make? Do you want to grow specialty greens and deliver them to a neighborhood? You could probably make a profitable small farm out of that. Do you want to raise a bunch of money and create a new technology and sell to large retailers? You need to think about what you want. It's not just about what makes the most money. If I was to say what would make the most money and the highest ROI, it would be a small specialty farm, right? That would be it. But is that investable? Is that scalable? Probably not as much as a greenhouse that's growing leafy greens or tomatoes, for example, but it is potential to have a higher margin and higher profitability. Well, I think, Mark Horler, this is a good question. Investors either care or don't care about it, right? Like, I feel like if you care about renewable energy, then you're going to finance a data center. If you care about the environment, you're going to finance a data center or a vertical farm. You need to ask the question of the carbon footprint, and vertical farms that are powered by non-renewable sources and greenhouses that are powered by non-renewable sources often have a higher carbon footprint than those that are powered by renewable sources. So, or even field farming that are imported. So you need to look at the data. We can give you some of that information. We provide some of it publicly. We've published it. And think about, am I willing to do that? And if you are, then you need to get creative about placing the farm where there is renewable energy, or in where you can make an economic case to buy renewable energy, or where you can make an economic case to integrate renewable energy. You just have to actually plan it and prioritize it and look at the data. From your operational experience, what are the biggest strategic operational blind spots that vertical farming companies like our indoor strawberry operation, Feast Farms, often miss in their first 5 years? I don't know your farm specifically. It's nice to meet you. I've actually never heard of you. I'd love to hear more about it. If you could send me more information. I like to track and support all kinds of startup CEA facilities around the world. I think what's often missed is, what I just see is like less of a focus on the customer and more focus on the technology. I mean, I just consistently see that as I've worked in 45 countries and I travel the world. Like, consistently, I see an obsession over that. And the more the ones that have survived tend to focus on the consumer more. They just are matching technology to what the consumer needs versus trying to reinvent farming and create a valuation of their business based on robots and lights and data and sensors and hypothetical projected efficiency from that versus demonstrable unit economics and sales. So focus on demonstrable unit economics and sales and match the technology to achieve those. How many of you incorporate utility program into your financing packages, incentives? It depends on the region, Fred. I'm not really sure. Yeah, this is a big problem, Patricia. There's a lot of big vertical farms that have had pest outbreaks. Pest outbreaks are kind of inevitable. They happen in all kinds of farms and all kinds of CEA facilities. So what we try to do is we try to think about them and project them in our economic models so that when we do a business plan or we review and do due diligence on an existing business plan for an investor, we look at those. Did they account for that? Because it's a real farm that's going to have problems. So if you're not thinking about them, estimating that, it's like you're not including, for example, depreciation, which is always going to happen. So if you're not including estimations of waste, of failures, of outbreaks, at least attempting to estimate it to mitigate the projections of revenue, you're not going to have a realistic estimate for your business case. For the investor, and we see this a lot with decks that we receive that we're reviewing for our investor clients, and we have the responsibility to consider this when we advise our clients on planning new facilities. Ralph, I encourage you to look at our software for typical ROI for 2 to 6 acre greenhouse farms, leafy greens. You can ask that question specifically on what our data suggests. Thanks, Kenneth. You rock too. Fabio, given how both China and the UAE are innovating so quickly, where do you see the biggest opportunities? I mean, I think I said, look, the US and Canada are huge opportunities. I really do. I think that they're exciting markets. Canada is going to have to grow more indoors because I think they're going to have supply chain challenges, and they have also urbanization that's encroaching on their own agriculture production and land, and they have just a colder climate. But they also have a lot of renewable energy in Ontario and Quebec, for example, which is a great potential to develop sustainable CEA. So I see great potential in Canada and also in the US. I think the US is very fragmented. And so I would love to see a little bit more consolidation, some regions, some innovation centers. Let's try to replicate some of the lessons from Almeria and from the Westland in the Netherlands of how working together and being closer together, and Leamington, can make us leapfrog technology and market impact. That's what the US needs to learn. If those things can be brought together, Canada and the US has a great potential to expand, and the data from Vaca University also suggests that with their potential to expand. There's also a lot of other places that have certain types of potential. The UK, for example, 43% of their products are from really high risk water nations for fruits and vegetables. Huge potential to fill in that gap over the next 10 years with CEA in the UK. Northern Europe has some similarities, some overlap with Canada that I already described. The GCC has a lot of opportunities, but I already talked about some of these things, and there's a lot of articles about them too. I can't speak about the tariffs now. They're changing so quickly. I really just don't think I can speak on that. That's not it for today. Mycology. I'm going to see what I'm going to answer next. Look at these questions. I don't think that there's more red tape in North America. I feel like Europe still has the biggest red tape, where they're going to challenge your assumptions on, you can't just say sustainable vertical farming, right? Which is what a lot of North American vertical farms will say, even though they're powering their farms by, carbon intensive energy sources, or they're saying we reduce our carbon footprint because we're closer to the consumer, but they're again powering from non-renewable sources. So their carbon footprint is actually higher. So, we see that a lot in the US, but you can't really get away with that as easily in Europe. But I think in the US, you have the advantage of more capital flow. I don't really know how to answer this question exactly, but I don't see more red tape in North America necessarily than other places. I think I don't know how to answer that question besides how I did. Let's see. Will vertical farming, this is an anonymous question, but still, will vertical farming be able to compete with dirt farming? I don't think vertical farming will be able to compete with field farming in the next 10 years. That's my answer. I think I said that earlier. Well, Joel, rooted vegetables, like if you look at Ala Leo farms in Dubai, what I like about them is they grow garlic and onions. So they picked a culturally specific product, built a small scale vertical farm at low capex, targeted at their community, this community of Indians that live in Dubai that can't get these products at quality because they're imported, and they sell them to them at a price that works for them. That is how vertical farming, small distributed vertical farming works, can be profitable, and can actually solve immediate food supply challenges. That's a very context-specific solution, and that's the question you're asking. You can grow some of these vegetables in these farms. They use a soil mix, and these smaller farms are being so innovative and creative in this way, and they can do that because they keep their capex low, and there will be many of these across the next decade in many places in the world. And our software is a great place to at least estimate the initial economics of those small farms, for example, because it's such a cheap way to get that data, an essentially free way to get that data. I don't want to talk about fertilizers. I mean, yeah, I already said, Aaron, that small modular farm units are good. I don't really like container farms because they're forcing a lot of equipment to a small system. So the economies of scale, the efficiency is not optimized. But I do like smaller scale conversions of spaces in urban areas, like the examples I already mentioned. I think there is great potential for those, and I encourage more of those. Again, they're not big business. They're not necessarily what a VC fund or sovereign wealth would fund, but they do demonstrate how vertical farming can work, and they do impact communities, and they do create profitable small businesses. Okay, we are almost out of time, and there's so many questions. So let me see if there's any more. I don't think I'm going to answer any more questions. I'm just going to say thank you so much. I didn't even get to read the chat here. I hope this was useful. I hope this was interesting. Maybe you don't agree with me, maybe you do, but if you're interested in working with us, if you're an investor or if you're an entrepreneur planning a farm, we provide the best in class data, strategy, design, and services to guide you. If you're looking for a low-cost solution, check out our software, Agritecture Designer. If you're looking for a free solution, follow my newsletter, the Agritech Chronicles on LinkedIn, and all of our content. We've been doing it since 2011, been producing blog posts since 2011. Imagine the amount of information that's there at your fingertips. Thank you so much for your interest. Vertical farming is not dead. Vertical farming is evolving. There's a new era here, and I'm really excited to be a part of it with you. And thank you so much for your time. If you have any follow-up feedback or questions, reach out. I'm pretty easy to find. Thanks so much and have a great day.